As the battle to contain the virus continues, fears about the impact of the coronavirus have now reached the economy. Hundreds of billions of dollars have been wiped off the value of leading Chinese companies on the first day of trading since China's markets opened after the Lunar New Year holiday. Now, it's the Shanghai Composite Index we're talking about. It closed nearly 8% down. Now, that's its worst performance in nearly 5 years. The slump coming despite the Chinese government injecting more than $170 billion into the markets to try and ease investors' concerns. Meanwhile, a special hospital to deal with the crisis has been opened in Wuhan. That's the city at the centre of the outbreak. What is amazing about this hospital? It was built in just 8 days. The 1,000-bed hospital, one of 2 dedicated facilities built to help tackle the outbreak. We are expecting the second one to be finished on Wednesday. More than 360 people in China have now died from the virus. More than 17,000 people have been infected. And in Hong Kong, medical workers have been striking to demand the closure of the border with mainland China. There are real fears of the virus spreading into the territory. And in the last few minutes, we've been keeping an eye on a press conference from Hong Kong's Chief Executive Carrie Lam. She has now said that 10 border crossings out of 13 with the mainland will be suspended.
There's still some 76,000 people entering Hong Kong, and then every day there are still some 30,000 plus Hong Kong residents leaving Hong Kong. And as I said, after they leave, they will come back again, and therefore they may still cause concern because there is risk of them bringing back the disease. So today, I'm going to announce that for all land crossings and sea crossings, there will be just 2 boundary control points. That is the Shenzhen Bay BCP as well as the Hong Kong-Macau Bridge.
Let's take you straight to Shanghai and join our correspondent there, Robin Brandt. A significant move there from Carrie Lam. Robin, what's been the reaction?
Well, you're right. Further restrictions put in place by the semi-autonomous government there in Hong Kong. First, they reduced air traffic coming from the mainland to Hong Kong last week by about 50% and shut down various other ways of getting into Hong Kong. Today, they've gone even further, now just leaving 3 ways to get into Hong Kong from the Chinese mainland. The first is by air into the main airport. The second is through the Shenzhen Bay area. And the third is through that newly built bridge opened last year that links Macau, the Chinese mainland and Hong Kong. So they're trying to restrict the areas, to restrict the travel, but also so they can create these bottlenecks whereby they can assess people going out, but of course, more importantly as well, coming in. I mean, the context here is that Hong Kong is a travel hub, obviously, a huge number of people going through it, so that presents a concern with spread, many of them from the Chinese mainland, but also during the SARS outbreak some 18 years ago, Hong Kong was hit disproportionately hard, and that's why I think it is even keener to take the measures it can to try and ensure that isn't repeated this time round.
And Robin, there's been worries for days now about the impact of the coronavirus on the Chinese economy, and we're seeing evidence, very real evidence of that today.
Yeah, certainly in the short term. I mean, the markets here today were just a kind of a sea of red. I mean, the context is it's the first time investors have had a chance to kind of express their feelings since the end of the extended Lunar New Year festival. So, yeah, there was going to be a sell-off anyway, but it was pretty severe when it came. And the market here in Shanghai, where I'm talking to you from, that closed down nearly 8%. Overall, about $400 billion worth of value wiped off leading companies. And it spread to commodities as well, which is hugely important in terms of a gauge of China's economic health. So, you know, copper, steel, rubber, cotton, all of those down by 6, 7, 8%. This is a barometer not so much of how investors think the Chinese government has dealt with or is dealing with the outbreak, but about the future and about the impact they'll think it will have on China's economy. And remember, China's economy is already having to deal with a slowdown in its growth rate, the like of which it hasn't seen for some 3 decades. So already the government has been trying to use some measures to try and ease the slowdown there. It's now going to have to go further, but you wonder what else is left in the tank.
Robin, good to see you. Thanks for joining us from Shanghai.